China has decided to stop production of low-quality steel using medium-frequency induction furnaces. We have two guests who join in. Independent analyst Rakesh Arora joins in, and Hongmei Lee, the senior editor, Metal and Steel News at S&P Global Platts, joins us on the show now to talk about that. Thank you to both of you for joining us. Rakesh, let me start with you. What's the sense you're getting about the announcement that came in yesterday on cutting of capacity and the slightly medium-term impact it would have on the Indian companies?
See, first of all, it's not a new news. Meaning China had already said they want to cut between 100 to 150 million ton of steel capacity over a 3-year period. So they have been going about this in 2016 also, and we believe they have already cut 50-60 million tons. Now, coming to this, induction furnace steel plant, it's difficult to guess, how much capacity exactly is there and what capacity utilization has been running, because it is like a marginal producer which comes into the market when things are going well and goes off, when things are bad. So overall, meaning my guess would be that the total impact is going to be around 30 million ton of steel production. And that too is largely long steel, which is used in construction. And this kind of steel is not normally exported out of China.
Oh.
So, yeah, so this steel is, normally for local consumption.
Mm.
So I don't really see too much of a, positive impact on steel prices globally, or any change in exports of China because of closure of this induction furnaces.
Okay.
Yeah.
Actually, then let's get Hongmei in on that. Hongmei, what did you make? Was there any new announcement? We just read it out of the South China Post. Is there any new development in terms of capacities being removed or production stopped? What is the recent metal news out of China?
Okay, the thing is, for China, they are still working on the steel capacity cuts for 2017. So yes, in a way we are right, saying that there is no specific number being mentioned for this year. But at the same time, we can get a rough feeling, seeing that definitely the capacity cuts will be more than last year, which was 45 million metric tons per year from the central government. Of course, the final achievement was higher than that, estimated at 80 million. But specifically, if we are talking about induction furnace, I agree that we don't have a specific number or even capacity. There is an estimation saying that such capacity in China is around 80 million to 100 million metric tons per year, but we don't know how much is operating. Market participants share that they believe that half of the capacity is operating, so which means that 40 to 50 million. But if you're talking in the overall steel industry in China, that really is not a big number. So I tend to agree, saying that this definitely is more like kind of affecting the sentiment than really the supply part. There will not be short supply of rebar, and also this will be sub-quality rebar. So we're not really talking about the common grade, good quality rebars. And policy-wise, actually, China decided to increase the power charges to different steel mills. So I believe the induction furnace steel mills definitely is one of the primary targets in order to increase their production cost as well. So this year, the latest development from China, they're saying that China trying to shut down and close all the induction furnace producers by end of June this year. I don't know how the progress, whether we can achieve that target, but it shows that Beijing definitely is very determined to shut down all these furnaces in China.
Okay, Rakesh, good morning. Then, the big question then, we have seen a huge rally in stocks, Tata Steel, JSW Steel, Jindal Steel. There is momentum. What would be your call on some of these names? And do you think some of these can still be bought at these prices, or would you be tempted to book profits here?
So, Anuj, as I've been saying on the channel, that, we think that demand is very well supported in the first half of 2017. And there's still a little bit of rally still left in some of these stocks. So probably, the guys who are holding it can continue to hold on. But getting at these levels is a little bit risky. The other impact of this induction furnaces is that these are all based on scrap. And if this capacity goes out and, blast furnaces used to produce, there might be some impact on cost of iron ore and coking coal. So to that extent, Indian companies don't have coking coal, and they can be impacted a little bit on the cost side. So all in all, I would say that hold on to your metal stocks for another few months, but don't try to get in at the top.
Okay, well, actually, I wanted to ask Hongmei, therefore, what does it mean for Indian producers? I didn't quite get, is China serious about shutting all induction furnaces? And therefore, should we expect that global steel prices, at least in the eastern sector, are going to rise?
For this rebar prices, actually, with the induction furnace being closed, I would say that this definitely will be boosting the confidence of the other steel mills in China, blast furnace steel mills. Whether this will be linking to the price, I would say it depending on the global economy, especially the Asian economy, whether the demand is really there to support higher prices. And the other thing is that this actually will giving China more choices of the scrap supply. So I tend to agree. Raw material wise, we may see some like price sentiment change, and then even the structure change a little bit. But the rebar prices, whether it will be leading to definitely a surge in rebar prices, I'm not so sure about that. Yeah.
Okay, Rakesh, just before we end the discussion, you made a interesting point, that the type of steel that China has cut capacity on is generally not exported, so it would really not matter to the steel prices. But where do you see the domestic steel prices head in the near term, over the next, say, 3 to 6 months?
So, Sonia, coking coal prices have been settled at $100 higher than the previous settlement. And that is going to flow through in the cost of most of the companies, not just Indian, but global companies, in the next 2 to 3 months. And that's why we are seeing a price jump in the domestic market. So we have seen around 5,000 to 6,000 rupees per ton increase. But that is largely a pass-through of, the cost increases that has happened. So only integrated companies are actually going to benefit. So integrated companies are like Tata Steel Indian operations are integrated for coking coal up to 60-70%, or some of the companies like JSP will have, steel coming out of thermal coal, where prices hasn't really moved much in India. So those companies will benefit more than pure converters like JSW. And so there will be a differentiation which will start to happen in the market, given the way costs are moving.
Okay, so what's your pecking order? Is Tata Steel on top, guessing by what you're saying?
I would say that Tata Steel is better placed as compared to JSW in this fact.
Okay, since we have you with us, Rakesh, just your thoughts on non-ferrous names as well. There also we have seen a huge rally.
So now, after the rally that we have seen in, zinc, which was one of the best commodities, and also a little bit in aluminium, I'm seeing that, base metal prices are stagnating. And historically, stocks tend to lose the correlation in the last 15% move on the commodity price. So, same holds true. See, China is the key for every commodity, whether it is steel or non-ferrous. And we have visibility only till middle of June, when the elections are due in China. Beyond that, there could be some consolidation, some weakness can come in as China recalibrates its policies. So, doubts will start to appear from middle of 2017. So, as I've been saying, it is better to book profits by April, May. And you can hold on till that time if you have the stock.
All right, we'll leave it at that. Hongmei and